Just a short video to show you guys what enabled me to go long this morning and ultimately how I called out pullback comes. The long this morning was pretty straightforward. I spoke about it in the weekend video, how rotations would be the game within Friday's distribution. As you can see, Asia found acceptance back inside the upper distribution from Friday, and that is when we by default know, as per balance rules, to expect a full rotation to the top. Now here's a subtle observation. Notice how EU range or London range developed above the Asia high. So that is another form of acceptance that you are seeing within Friday's distribution. So as we had the open at 41.65 with lack of interest below, literally a tick or so, that's when I knew that long is the play, because now we are really going to go ahead and complete the full rotation to the top 41.77. Now, not only did balance rules enable me to catch this, but outside of the context, I also look at Confluence. Without the presence of Confluence, I seldom take a trade. So here's the first Confluence we had, something I shared with you already. The mirror development from 16th of October, where we had a Monday futures gap up back inside the balance zone 43.69, and I think that was 43.69 and 44.94. So as soon as we found acceptance back inside 43.69, we had period A charge up. Similarly, we had the same situation here. Acceptance was back inside the the upper distribution from Friday, and all we did is charge up during period A. Now this time we rotated right into the top of distribution, which means continuation would be difficult to find. So that's the mirror development that enabled me to catch the long right at open. Another reason is that DAX today morning rallied literally from the bottom, from the lows of Friday, all the way to Friday's value area high. I was expecting a similar development to now also occur in ES, where ES would rally from Friday's low all the way to Friday's value area high. Now I understand some of you may have the value area high at 4180s. It doesn't matter. Broadly, you and I both know the weekly plan clearly suggests 4176 to 85 is a major zone of importance. Until below that, buyers haven't truly gained control. So with these two mirrors in place, the confluence being present, I was able to hit longs right at the open. Now, let's quickly move on to shorts. I had multiple reasons to call out pullback comes at 4180s. First, NQ was at its balance halfback, its Thursday's high, essentially at resistance at the gray zone. Now, what's noteworthy is that we had a textbook list framework short confirmation. So this is on 15-minute time frame. We had a breakdown confirmation, retest, and look at this, a textbook take position, nice wicks forming within the zone, and boom, there you go, that's a short. Now, club that with DAX being at its resistance, which was marked at 787.804, also being in play, and ES being at its famous 4180s, along with our standard exhaustion of 30-40 points from Asia low being at play. There you go, exactly between 30 to 40 points we had a run up into resistance across three indices. There you go. So you had exhaustion, you had balance rules, you had cross intermarket confluence all being present at once, along with the balance rules guiding us on how to deal with these breakouts. And all we could see is lack of acceptance right here at the Thursday's range top. This is a short, and by default so did it turn out to be for ES and DAX. Thus, shorts were a no-brainer. Lastly, nobody in my room should forget my note on going long when panic is present, something that we did on Friday at 41.35s. That was the weekly support. And like I said, we only short during RTH, never Globex. And so far, if you guys have been tracking this, all 3 days, past 3 days, only short opportunities have been present in RTH and not during Globex. So what does this tell you? You want to watch for a change of character when finally it so happens that RTH doesn't sell off, instead continues what London does, or vice versa, where London dumps but RTH picks it up instead of what we've been seeing in the recent past. Now, some may say it's the BOJ that resulted in a sell-off. I say it's the 4180s because somehow the level has been at play during central bank headlines. I leave you with that. Back test and you might be surprised. Until next time, trade responsibly.